Hey, it's Chris, your private lending guy here, and in this video, I'm going to help you answer the question, do you know your number? Now, what number are we talking about? We're talking about the amount of money that you'd like to be coming into your bank account each month during retirement. Now, let's identify that number, then we can work backwards to get there. Now, for our example, I'm going to use the number $10,000 a month of retirement income. So if your number is higher than $10,000 a month, then just get your calculator out on your smartphone and use your number in the calculation that we're about to do. So now that we know what we'd like to get every month into our bank account during retirement, the next number we need is the interest rate we're getting on our current investments. Now, once we have the interest rate, we can then calculate how much money that we need to invest to get to, in this example, $10,000 per month during retirement. So the first interest rate example I'm going to use is a bank CD, which a lot of people use to protect their money. Now, according to Bankrate.com's 2023 survey, the current average one-year yield on a CD is 1.47%. And it's actually lower at 1.18% on a 5-year CD, so let's use the higher 1.47% number for our math here. So get your calculator out on your smartphone and do this math right alongside me. All right, now the first step is to multiply $10,000 per month by 12 months because we want to get our total amount for the year that we want to make during retirement. And in this case, 10,000 times 12 months is going to be $120,000 a year. Now, in the second step, we're going to divide that number by the interest rate we are using. In this scenario, we're going to use the Bankrate.com's one-year CD yield from their 2023 survey, which again is 1.47%. So let's divide $120,000 by 1.47% and see what we get. So how much money would a person need to invest at 1.47% to earn $10,000 a month in retirement? Well, you can see here the answer is over $8 million. Okay. Now, let's look at option 2, where you invest your money into real estate where you're protected in first lien position as part of our principal protection program, and you have access to our capital growth program because you've committed your money as a private lender for at least 3 years. Now, let's first review the rates of return inside our private lending cash flow program as a reminder. And if you remember, we have 3 private lending levels. You can see we've got the Pro, the Elite, and the VIP level, all based on the amount you have in your budget to put into single-family home real estate. And then you can see the preferred returns are going to be either the 8, the 9, or the 10%. And then we've got access to our capital growth program bonus, where we're giving you bonus points if you're willing to commit at least 3 years to the program. And you can see the points there are a quarter point, a half point, and a full point at the VIP level. Okay, let's get back to calculating our numbers. So remember, in this example, we're going for $10,000 a month in retirement, all right? And in this second option with real estate, we're going to use the interest rates inside of our program. And you can see here at the Pro level, at the preferred return and the 3-year target return, you can see the dollar amount there you would need to invest to get to your $10,000 a month goal, significantly less than $8 million, right? In the CD option. You can see at the Elite level, you drop down to 1.3 million and 1.2 million at the preferred and the target returns. And then at the VIP level, it gets even better at 1.2 million and just over 1 million at the 3-year target return. Now, it's important for me to point out that with this math that you're looking at on the screen, this is worst case scenario, right? Because again, your budget is going to be going in likely into more than one deal. Okay, so you're going to be getting those bonus points on more than one deal, which is really only going to reduce the amount of money that you actually have to put in to get to $10,000 a month or whatever your number is. All right, so I just wanted to refresh your memory on that. Now, hopefully you can see why I get so excited about private lending and why this is a much safer and more secure way to invest your money, because not only do you get true returns because you're not paying hidden fees, but you don't have to worry about the volatility of the stock market. And hopefully that helps you answer the question, what's your number? Now, the next step for you is to decide how much you want to make in retirement every month and then figure out what your real number is. And as always, if you've got questions around what I just shared, please email me back or send me a text to my personal cell phone. I'd love to talk more about it with you. Now, before I let you go, I'd like to share another quick case study with you of a deal that we did with one of our private lenders. Okay, so here's a picture of the single-family home that we purchased using money from our private lender. And I'm going to show you the math in a minute, but first, I want to remind you of our core belief as a company. This core belief is important because it's what gives us unique positioning in the market over our competition. It's also what creates incredible security and safety inside our model. And here's our core belief, as you can see on the screen, which is a person paying $1,000 a month to rent would rather pay $1,000 a month to buy. So our entire front-end acquisition model in our business has been built to make sure that we're buying deals at big enough discounts so that when we turn around and put buyers into our properties, these buyers are paying around what it would cost them to rent the same similar type property. Now, why is that valuable? Not only does it give us unique positioning in the market with our buyers, not only does it put our private lenders in a position to maximize returns, but it also creates a big safety and security net for us if, for example, the market were to slide a bit, which we know in real estate, the real estate market goes in cycles, and so there's always going to be a slide at some point. Nobody knows when, we just know it's likely to happen. So that's why we buy at big discounts, to protect us from that, number one. And number two, it's why we price our properties based on our core belief. So if you put yourself in the shoes of the buyer, for example, and let's say things get tough in the economy, and you're looking at your budget, well, everybody needs a place to live, right? Why would you move out of the house you're in with us when you know you're just going to have to pay as much, maybe sometimes even more, to rent? Right? It just doesn't make sense, and that's where the safety and security comes from. Okay, so let's look at what's in it for my private lender on this particular deal. You can see here the investment is $139,000. The after repair value is $250,000, which puts the loan to value at 56%. And as I just mentioned, we're buying at big discounts, at least 25% or better. So we never go above 75% loan to value. You can see our private lender is going to have the safety and security that they're looking for because they're going to be in first lien position on a new mortgage on the property. You can see the investment term in this example is 12 months and then the rate of return at 10%. Putting the monthly interest income at what you're seeing there on the screen. Okay, so that's all I have for you today. Here's what I'd like you to do next if you're ready. There should be a button somewhere around this video where you can book a one-on-one strategy call with me to get all your questions answered and see if private lending is a good fit for your investing goals. Now, if it is, we can then discuss putting you into our queue so that you're positioned as close to the front of the line as possible for when our next private lending opportunity becomes available. Okay, I'll even tell you on our call how to jump straight to the front of the line if you're someone who wants to go fast. All right, and my personal cell phone should be somewhere around this video. Feel free to call if you have any questions. Texting always works best with the volume of calls I get, but definitely feel free to call if that's preferred for you. Okay, thanks for your trust. I don't take it for granted, and I'll see you in the next video. To freedom.